Hi guys, welcome to my most favorite day of the week and the time of the day because I get to spend it with you. And I'm always experimenting because why not? And there were a couple of really good questions that I wanted to look at a little bit more. So we're gonna start there, and then I'm gonna give you the technical since you guys had been asking that last week too. So here's the question. Lori KO 5939 asked, can you explain what is happening on February 15th for silver owners and how we can fight it as stackers? The privacy is going away and they want to track every ounce we buy and sell. Well, the reality is that's what the whole world wants to do. The question is, are we going to fight? But we'll just stick with this for the moment because on February 15th, there are new reporting rules that kick in that directly affect those silver stackers in Canada. And, what goes in one place, happens in one place, does not stay there. So it's important for all of us to be aware of. Dealers will be required to report large cash transactions, which they already are in the U.S., verify identities more aggressively, and flag anything they consider unusual. So it doesn't actually make silver illegal, but it does mean the privacy that stackers have relied on is being eroded. So every time you buy or sell through a dealer, more of that information flows into a centralized system. Now, let's just take a look at the bigger picture. The Bank of Canada holds 0 gold, not a single ounce in reserve. That means that if confidence in the currency slips or the financial system hits turbulence, the government has no hard asset buffer of its own. So I did look in there, and there has never been a Canadian overt confiscation. However, they also don't own gold, and that makes it a little risky because when governments lack reserves, they become far more interested in the hard assets that are held by the public. So while I can't say that confiscation is happening, and again, Canada has never overtly confiscated gold or silver, but structurally, the pressure increases when the state has none and citizens have plenty. And I want you to just remember that the transition that we're in right now, that reset from this one system into the new system, well, we've never really gone through this before. This is different than when we went through the transition from a gold standard to a debt standard in 1971 because they need to reinvigorate the entire fiat currency system. And what they really have to do is they have to do that overnight revaluation because gold is the most trusted collateral without any counterparty risk. So keep it in mind. And it has been happening here in the U.S. for a very long time. Having said that, I want to let everybody know that at this point in time, we are not legally obligated to report any part of the transaction. This would be true on American Eagles. It's 100% true on the Collectibles. So just keep that in mind here in the U.S. But what do they want to do? They want to digitize everything so that it could be used for collateral and they could track everything, the buys and the sells. This is why we have to come together on a global basis and demand our rights back. Because otherwise, we're slaves. That's it. We're slaves. You have to ask yourself, is that okay with me? If it is, don't worry about it. If it's not, then come together and let's get redeemable gold back in the system. Okay, Mr. Petteroni 1 asked, is it possible for gold bullion to be confiscated even if you hold it in a different jurisdiction? As a Canadian holding American Eagles instead of Maples, does that reduce the risk or might be a good exit plan? And, I get this question a lot, whether holding gold or silver in another jurisdiction or in another jurisdiction's form protects them from restrictions at home. And the truth is this: governments regulate based on citizenship and residency, not the mint or the stamp on your coins. So if a country ever imposed controls on bullion, it wouldn't matter whether you held Maple Leafs, Eagles, Philharmonics, or anything else that is bullion. Bars, bullion is bullion, and holding it offshore doesn't eliminate the authority your home country has over its citizens' financial assets, let alone holding it in your country, just a different form of gold, American Eagle versus Canadian Maple Leaf. But you know what? Here's the real takeaway. Because history shows that when governments tighten control, they target the monetary metals, not the collectibles. That's why our sound money strategy is based on the collectibles market. But I just finished a video, I don't know when it'll be coming out, on the different ways that you can hold gold and silver, which is why you see all of this stuff here on the table. And I want to remind you, yeah, you can stack bars and you can stack bullion, you can stack all of that, but you can also have a very diversified portfolio that includes what we could hold even when you couldn't. So the collectibles of all kinds, right? They have layers of protection that bullion coins do not have. That's why it's critically important for everybody to understand the true fundamental value. How much is this stuff really worth in terms of dollars or euros or wherever you happen to be in the world, in terms of that currency? What's its true value? Because that's where it's going. I can't give you a whole lot of guarantees, but I can guarantee that I will show up and I will do the work. And I can also guarantee that at some point, all assets go to their true fundamental value. I did a little experiment because I bought this when I was in Malaysia and Cambodia, and it's a sterling silver belt, right? And the workmanship on it is really beautiful. And I happened to wear it yesterday for the first time, and I thought to myself, you know, I bought this, when did I go? It was like the end of September, so before the big run on the spot markets. And at that time, I think I paid like, I don't know, $300, $325, something like that for the belt. So I happened to wear it yesterday, and I thought, I wonder how much this thing weighs, because I never weighed it. But I did, and it weighs 10.7 ounces. That means that what took me, you know, $300 or $325 to buy in September is now just the monetary value of it, worth double what I paid for it in terms of fiat, without this extra layer of protection, because it's a collectible, isn't it? I want you to keep this in mind. You know, I always have my forks and all of that over here, because gold and silver in any form is monetary at its base. So once you become clear that the true fundamental value of an ounce of gold at this moment, before more money printing, is somewhere between $38,000 and $40,000, and the true fundamental value of an ounce of silver before they do anything else is somewhere between $1,800 and $2,000, then if I paid $350 for it, what difference did it make, right? Just like my necklace that you see me wear that I bought back in 1987 when I first moved here for $350. You know, and the latest appraisal was $6,500. Just the gold content weight, I turned it off. Give me a zero. Just the gold content weight of that is 1.6 ounces. Do you see what I'm saying? It's not that gold is going up. It's the value of the dollar going down. And gold and silver in any form will hold your purchasing power intact. It's the way that you hold it and the variety of ways that you can hold it. So the strategy isn't switching mints or crossing borders. It's stepping into forms of metals that give you insulation, privacy, and control, no matter what jurisdiction you're standing in. So now I'm going to go to, I need the slides up, because Daniel Mastroco last week said, I'm curious what the 5 gold confiscations in the U.S. government has done. Google doesn't provide the results. Maybe you can make a short video on that. And that's what I'm doing. So these are, and actually when I went back and I kind of looked at the definition, again, I'm wrong. Right? It's not 5 times, it's 7 times. And I'm also not just looking at the overt confiscations, but the currency revaluations. And I didn't have those in my list. The two, oh, did I say this? The 2 that happened in 1973, the first one in January, which was just under 10% revaluation, and the one in February that was just over a 10% revaluation. They did it in measured strokes so that you and I, well, those of us that were around then, didn't really notice it too much, except I can tell you, I remember the inflation that was happening during that period of time a lot, something about 45%. So I think it just missed the hyperinflation definition of 50%. But here they are. In 1812, contracts that were invalidated and the mints were closed. In the 1860s, the government went further by physically confiscating gold and voiding private contracts. In 33, citizens were forced to surrender their gold, and in 34, the government revalued it overnight, capturing 40% of the public's wealth with a single stroke. And guess what? Based on all the money that they created up to 33, they should have done it to 42.22, but they knew that the public wouldn't be able to tolerate it. So we started out, even after the revaluations, in a deficit. In 1971, convertibility for other governments was cut off entirely. That was a Bretton Woods default. And, you know, I never really thought about it as a confiscation, but it was totally a confiscation because foreign governments that were holding their gold here with the promise that they could exchange dollars for gold anytime they wanted, that was the default. Right? Because we said, nope, you can't do it anymore, which means that the U.S. confiscated the global gold. And by 73, that gold was revalued twice more. So understand this, the pattern is unmistakable because, let me show you this. I thought, well, here's just a list of all the times just since, well, I think we go to 1812, the number of times and the different countries that have done overt and reasonably covert confiscations. You know, the pattern, right, during wars, depression, currency instability, the government protects itself first, right? They flip-flopped the Constitution, where it used to be that the individual was the head, and then the states were supposed to support the individual rights, and then the federal government was supposed to support the states who were supposed to support the individual rights. That's been flip-flopped. And you need to understand that it's not always through overt seizures, sometimes through revaluation, for bans, for forced sales, inflation, taxation. At the end, the result is the same. Citizens lose their purchasing power if they believe the lies. And we know, how many times can you be lied to and you do not know the truth? History doesn't repeat perfectly, but it rhymes. And every rhyme points to the same truth. In a crisis, gold moves, governments try to move faster because whoever holds the gold holds control. So I hope that answered that question. Now let's get to the technicals, because I want you to think of the global financial system as a long line of dominoes. Some are big, some are small. You know, at first they're all standing upright and they're all connected. What is happening in the metals market right now is a problem. It is the first big domino. And remember, we've been talking now for over a year about the transition from the paper markets controlling the prices to the physical markets. What we're talking about here, because people are going crazy. There's so much volatility in those spot gold and silver contracts. They are contracts. The physical markets do not move that fast. But look at this. This is a trader who made billions on gold contracts, suddenly betting against silver, meaning selling it short. That's not a casual move. That's a heavyweight leaning in, using the leverage of the paper contracts. And when someone with that kind of track record shifts their position, it's going to matter. And it's because they can feel the instability and they sense the wobble. They know that the dominoes are closer to falling than anyone wants to admit. And remember, silver is the fuse. It straddles both worlds, so it's a lot more volatile. But this trader, he's not reacting to physical silver. These physical markets, they just do not move that fast. He's reacting to the paper market, a leverage contract stacked so high that they're swaying. That's what we're seeing right now. It's really so interesting. And you know, when one big domino tips over, it doesn't fall alone. This shows you what happens when the pressure spreads from a single trader to an entire government's central counterparty intervention. They had to, because it threatened the entire very fragile paper system. It's political weight, because when a government steps in, especially one as large and influential as China, it means that the position is big enough and the leverage is heavy enough that it threatens total stability in all the markets. This isn't about ounces of silver. It's about those contracts. Short, hello, see, she wanted to come in and see it. Hi, baby. But shorts are selling something that you don't own, and then you anticipate that pushing down the price so you can go in and buy it cheaper, and then you earn that difference between what you sold it at and what you go in and buy it at. But what I really want you to understand as well is a lot of this are naked shorts. So where a short position, you might be short against the box, it's called, against the box, meaning he's got the physical silver over here, but he shorts the paper contracts. That means that if you had to, you could go in and deliver that out. But this position was so large that this was considered a naked short, which means there's no silver that can be delivered. This is huge because, again, once a government intervenes in a short position, it tells you that the paper side has grown too large relative to the real metal underneath. Now the dominoes, they're leaning harder and they're leaning faster. And frankly, they're leaning in one direction. So let me show you, because once political weight hits the line, well, then what is it? The next domino begins to lean, and that's the gold contracts. Contracts. Let's look at how that paper market is tilting the biggest piece in the chain. Let's see. Oh, spot gold. This is the spot gold contract. Okay. What I also want to show you in here are the technical moves, because on 2/6, we were at 49. So I just did this. What's today? Today's the 10th. Okay. So this is, I pulled from Friday, and you can see that big, huge correction. Now, I want to remind you, first of all, that the distance from that 50-day moving average that we've been talking about now for quite some time is 9.45. 10% is a lot. So it's still a lot away above that 50-day moving average. But the 200-day moving average is still 37.38% away. That is extreme. That is showing a massive divergence from its long-term trend. It's not spot gold drifting higher. It's tilting, it's leaning far above that 200-day moving average. And that kind of move doesn't come from the physical part of the buying, though we are, and I cannot wait until it's complete, but it's not complete yet. That transition from the paper markets dictating the visible price to those physical markets dictating the true supply and demand price. What you're looking at in the paper market are futures, options, swaps, unallocated accounts. You're looking at shorts and naked shorts and all sorts of things. Leverage, leverage, leverage. And leverage means you got a teeny weeny bit of equity and lots of debt on top of it. That can topple the whole entire system. Remember, 2019, I don't know exactly where it is today, but according to the Bank for International Settlements, for every 1 physical ounce of gold in any form that existed, there were 64,000 ounces of digital gold. And that was 2019, before the party really started. So keep that in mind, because when gold stretches this far above its trend line, it's not because the physical market is tight. It's because the paper market is unstable. The contracts are wobbling. The leverage is swaying. And gold, spot gold, the biggest domino in the line, because it's a paper contract, it's starting to lean. And there's your volatility. It does not mean that it is overvalued. Nothing goes straight up. Nothing goes straight down. You get bouncing along the way. And I've shown you this before. Markets can stay irrational a lot longer than you would ever think possible, but they can. However, they could just be staying in this range, giving that 200-day moving average a chance to catch up. That's the technical part of it. But frankly, if gold is leaning, silver's racing, because it's the smallest domino in the chain. It moves the fastest. And this next slide, whoops. Yeah, this is not ready yet. Sorry, I'm a little ahead of myself, but you guys will forgive me. Because you asked me last week where was support, so that's what I pulled. So you can see, and all you have to do is pull up any chart and pull up a ruler or some kind of straight edge and start drawing lines, right? So you can see the support on spot gold is at about 4,400. That's the first line. And then I did another one because remember, once a support on the bottom line is broken, that then becomes the resistance on the top, okay? So the next support line below is 3,900, and you could just see where it hit and then it bounced up. And then this last one, which I do not think we're going to get to any one of these levels. Maybe 4,400, but you asked me where the support levels are. That's why I'm showing you this. And you've got a ton of support, a ton of it at 3,450. So on spot gold contract that does not reflect the true fundamental value, there are your support levels as requested. Now we're looking at spot silver, and spot silver has closed below that 50-day moving average. So I didn't log that because that's okay, but the distance from the 200-day moving average is still extreme at 57.45%. 10% is a lot. So that is an extreme long-term trend or long-term breaking. And it shows that an even more extreme divergence, more than 50% above its 200-day moving average. This is not the physical world. This is the paper world that I was just showing you with lots of shorts and traders and going back and forth. They don't give a crap about the true value of gold or silver. They just care about the little bit that they make up in between. And these kinds of moves in both spot gold and spot silver, they're very rare. It doesn't happen in calm markets. It happens when the paper side is overloaded, and we are in this transition right now as you and I are talking. And it is the most leveraged metal in the system. The paper claims, I can't even determine what they might be because they're buried in so many different places. And when traders place those big directional bets, right, then governments intervene when they go wrong because they're too big to fail. But you and I, we're just the right size. So let's take a look at the support levels in spot silver. The first one that I find is 59. And it doesn't mean that it's going to go down to that, mind you, but you asked me where the support is, so I'm showing you. We've got a support level of 59. The next one below that is 55. And the one below that is 39. Do I think that we're going to get to the 30? No, I think those days are gone. Long gone. And that's just fine. Do I think that it can test it? Yeah, but it can stay in this range, giving that 200-day moving average an opportunity to catch up. So I think that's all I did. Nope. I did one more for you guys because you keep asking me about the gold-silver ratio. So it got down as low as 44.14 to 1 on the 25th of January. And as of 2/5, February 5th, it was at 64.39. Now, I don't know if this is the divergence that I've shown you before, because remember, as we're going through the reset transition, for a while, since silver is the fuse, gold is the anchor, right? So for a while, that silver-gold ratio gap closes, and then we get to a point where it's recognized that the hyperinflation is in play, and then it broadens again. I don't think that that's where we are yet. I think this is just technicals working off a severely overbought scenario. So we'll stay tuned, and I will let you know when I see things changing, or when you ask me more questions, and I'll dig in and do it some more. And I believe now we will take questions. And Sari's client asks, why is the gold spot price lower in the U.S. than in other countries? Well, you know, the U.S. has the COMEX exchange, London has LBMA, we've got the Shanghai exchange. So it's going to be priced in different metals or in different markets to their exchanges, and that's why you'll see the difference. However, in every single currency, take your pick, you've got new highs in both spot gold contracts and spot silver contracts. But that's why. There are different exchanges, so it depends on which one gets followed, would determine the price that you see. Also valued in different currencies, but that's why you'll see the spot price different. And from YouTube, Peter Bondarchuk 1, I'm sorry if I butcher anybody's name, please forgive me. But the physical market changes with the paper price, does it not? I agree that if you don't hold it, you don't own it, and the paper markets are nonsense. And you're absolutely right, Peter. This is what we're talking about. They have been really since the 70s, when they really created that spot gold contract in today's form. The paper markets were designed to price the physical markets and hide what's really happening. But that started changing in January of last year, when some fat finger here said they had the contracts, the futures contracts on gold and silver, but they said, no, We want delivery instead of just trading the paper contracts. That was a key shift because it brought the physical from all over the world. It's just the U.S. that depends mostly on the paper contracts that we've been dictating to the world, even if it's in different exchanges. We, the U.S., have been dictating that. But just like our financial power has been shifting, the power to control the markets has been shifting in terms of the physical markets. So we have not concluded that transition yet, but we will. We will. I don't know when. I'll let you know when I see it. But yeah, the paper markets have been guiding it, and that's why actually maybe we can go back to, did I do it? Let me see. I might not have done it. No, I did it in the different ways to hold physical gold and silver. So right now, you are correct that the paper markets still continue to control some of the physical markets like bullion, right? And even if you're buying jewelry, they're gonna base it on the paper markets at the moment. But we are in transition. I don't know how long it's going to take until true supply and demand markets come out. But people think that everything is priced based on supply and demand, and it's not anymore. Everything has been turned into a trading contract. So it's been the traders that are telling you how much and dictating how much you're paying for your energy, your food, your water, your cell service, whatever. This is a trading economy, but that is breaking down now as affordability is finally becoming an issue, and as the physical markets and the demand in the physical markets is now changing the whole shape of how those true supply and demand markets are. So yes, for the moment, but stay tuned because we're already in flux. This is not something that I'm waiting for. It's actually something that I've been talking about all year long. And the level of volatility and this price action away from that 200-day moving average on the spot markets, etc., that's what that's really telling us. Look at the charts. Look at the behavior. Pattern shift. And whenever you see a pattern shift, you don't even need to know exactly why did that pattern shift or exactly what does that mean. You just automatically know things are changing. And then we talk about it so you can understand it more deeply. And that's what we're seeing in those spot markets. And it's because this shift has occurred that started over a year ago. When did the run really break out? When did the run really start? It was, we had a breakout. I'm looking at the chart, like December, the end of December is when that breakout happened. So not that long, right? Pattern shift. Yay! I love pattern shifts. And RJGE Esquire 8967 asks, Lynette, my LCS owner explained that grading modern proof gold coins would also be exempt from 1099-B. I've heard things like this before. Can you please clarify or give your opinion, please? Thank you. Well, in my very strong opinion, since you can hold it inside of an IRA, then I believe that would still be classified as monetary gold. Remember, what makes this collectible is that it was minted prior to 1933. They can't go back and create them again. Plus, these coins were created to be used in the normal marketplace. That's what this is, all these fractionals, right? This was our money, just like silver was our money. And we learned to trust this. Right? That's how they sucker you in. How do you catch a wild hog? You lie to them, you sucker them in, and you capture them. So you can do whatever you want, and you should do whatever you want, regardless of what anybody says. But if I can hold it inside of an IRA or any retirement plan that is totally not the kind of gold that I buy. But you do whatever you're comfortable with. I definitely disagree 100 bazillion percent. I couldn't disagree more. I couldn't disagree more. And especially really when they take like the new silver coins. I don't have one on here, but I do have one. You know, the wholesalers don't pay for that extra. They do pay for a bit extra in the proof gold, but you do whatever you want. I don't own any. And Big Motorhead 2908, gold won't be confiscated but highly taxed, which it already is. So how about that being a form of confiscation to try and keep people away from it, just like your IRAs? I don't want to pay those taxes. So you leave it vulnerable to the system. And you could be right. I can't guarantee that there's going to be an overt confiscation, though you saw that long list. So I don't know. I was saying 3 times, then I figured out that it was 5 times, and now I figured out it's 7 times. Nah, they would never confiscate gold again. Really? Really? I disagree with that too. Historic precedence is simply historic precedence. Could this time be different? Because that's what they always want you to think. This time is different. But it never is. Maybe you're right. Maybe you're wrong. How about holding something that doesn't matter whether you're right or wrong? What a concept. And from Riley's client, why is there such a gap between the Western paper silver market and the physical Asian market? Is the paper silver market going to fail if the comics can't meet physical delivery? They'll declare, they've done this before, and not that long ago. They'll declare a force majeure and pay those contracts out in cash. But yeah, it stresses any of the physical markets. And if so, will we see that gap close? We will see what we are seeing right now with this level of volatility in those paper contracts and all of those short positions. Again, is that transition from the paper markets dictating price to the physical markets dictating price? So, yep. And this is question number 2. If I have roughly 4,000 ounces of silver and in 1 times 1,340 American silver eagles and 16 kilo bars and 27 1-ounce bars and 35 ounce bars, should I convert the bars to gold? This is my retirement, so I don't want to make a wrong decision or miss out if I convert too soon and the ratio ends up closing more. What would you suggest? This is what I suggest. I suggest, and I know you're working with Riley, so I'm 100% certain that you've probably taken these steps already, but that is defining what it is that you're trying to accomplish. If you're 100% in silver, silver is the fuse. It is what moves first, but gold is the anchor, and it is what all other currencies, any collaterals are revalued against. So gold needs to be, this isn't a trade. This isn't a trade. Gold in you do whatever you're comfortable with. My personal portfolio, gold is my anchor. I definitely own more gold, and I actually do own it because I hold it, right? I own far more gold than I do silver. Silver for me is about barterability. And those big bars, you know, they're hard to work with. So you're working with Riley, and Riley does a great job. And you might want to, based upon your goals, start to reposition your metals portfolio into what actually will support those goals. I'm not saying you can't do everything with silver, but it's not the primary currency metal. It's the secondary currency metal. Governments have gold revaluation accounts. Gold does not get used up in manufacturing or anything like that. So we can account for pretty much all the gold that's ever been mined in any form. Doesn't matter. Silver gets used up. This is, I'm glad that you have that. That's fabulous. And you can do whatever you want, but you're too lopsided, and it's not a very functional portfolio with all of those big bars. I don't mind the eagles, but as we all know, I like a variety of sizes and I like a variety of forms. So you don't want to convert more than, all of it. Certainly there's a lot of it there that is absolutely usable, but you need to base what you're holding on what you're trying to accomplish. And that's what I would suggest. And you're working with Riley, so she's great anyway. And Sparky V H4G asks, some of the online gold sites show Bitcoin as a buying medium. Please explain. Well, I mean, any dealer has to accept whatever the tool of barter might be. And so there are a lot of online gold sites, and there are a lot of people. I mean, look, let's think about this for a second. The NSA, which is a government agency, came out with a white paper in 1996. Anybody can pull it up and read it on how to create a mint. I do not think that it was any coincidence that Bitcoin, this is my physical representation of Bitcoin, was born in January of 2009. Quantitative easing was born in March of 2009. They created it as digital gold because they want you to think that this is a new form of gold. It's not, and for lots and lots of reasons. I've done a video on that, but they sure want it to look like it, don't they? This is a real gold coin. This is a fake representation of Bitcoin. This holds energy and can be used an indefinite number of times because gold is indestructible in any form. I could convert this coin into this bracelet or vice versa without any loss of value. But I mean, they're willing to accept Bitcoin in payment. That's all that means. I'm not saying that they should. I'm not saying that they shouldn't. I'm not saying that we won't in the future. We have to see what the tool of barter is, but that's basically it. And it has the people that go, or at least originally, I don't think this is true anymore, but originally the people that typically go into Bitcoin to get out of the system, around the system, and have something that is not under the control of governments, how much more money would have gone into physical gold had Bitcoin not come out when it did? So, yeah. And G Goddess 339 asks, are gold and silver only valuable during financial crisis? If so, what other eggs should I have in my basket to diversify when gold and silver values are low? Well, actually, you always need a foundation, in my opinion. You should always have a foundation of sound money because it's the only money that governments do not and cannot create and do not and cannot control. So it would be the type and the level of gold and silver in your portfolios, not should I have it or should I not have it. You should always really have it. And no, they are not only valuable during financial crisis. And I go back to, what did I do with my necklace? Here it is. I bought this in 1987, right? And that was a period, the 80s, greed is good, Gordon Gekko, Wall Street, and all of that. Remember that? Okay, $350. And what did this necklace do? It's the same necklace that I bought, and I've been wearing it for all of those years. It is exactly that same necklace, but the value of the currency has declined. That is inflation. So gold, as the only financial asset according to the Bank for International Settlements, that runs no counterparty risk. Everything else is a contract. This is a contract and this counterparty failed. This is a contract and this counterparty failed. This is a contract and this counterparty is failing. The whole system is based on inflation and robbing you of your work and your wealth. there are times, and there will be times in the future, and I'll let you know when. I'll let you know when I'm doing it. You do whatever you want. But there will be times in the future that those assets that will actually survive this reset, and I can't tell you what they are right now because there's too much off-balance sheet garbage that goes on, right? I can't tell you what cryptos are going to survive. I can anticipate some of them. I'd say Tether with all of its gold might be one of those. But what I can tell you is that what is currently severely overvalued will become severely undervalued. Those zombies that cannot make it will be washed away, and we'll start with a clean slate. But what's the difference if you have the kind of gold that you can hold and use in the normal marketplace? This was my lesson from Uncle Al. Then I'm holding my purchasing power, and I can convert into those other income producing assets when they are undervalued. And we'll know that it's the time to do it when we see that cup formation, just like I show you on the gold and silver, the spot charts all the time, right? That's the beauty part of understanding what these patterns mean and having the ability to recognize them. Because once you know, I mean, knowledge is power, right? And how many times can you be lied to when you don't know the truth? So, no, they're valuable always. Why are wedding bands gold? Right? Not all wedding bands are gold now, although they used to be. And in fact, I'll tell you, because I brought them in, I had a couple of, I mean, super little skinny with little diamond chips, which was my mother's first ring that she got from my father, who made $15 a week. He said he married her because she made $20 a week. My mom made, so she was making a lot of money. Now, this would have been in like the late 20s, early 30s, right? And if they held it in this form, I should say in this form, if this is the way they were holding the gold, it was indeed, well, they were tasked with turning it in. They actually didn't have to, because if you read the law, it says any coin minted prior to 1933 is classified as rare and unusual, which is why I'm quite comfortable with these raw for my savings 1 ounce gold pieces minted prior to 1933. But quite honestly, as a technician, understanding the true fundamental value, understanding the language of the markets, I don't own any stocks. I don't own any bonds. I don't own any cryptos, which some people will say I'm crazy for because I've been watching Bitcoin since it was $7 a coin. But I absolutely knew, because I've studied currency lifecycles since 1987. My belief was then, and if you were talking to me then, you know we had this conversation, that I believe it is a Trojan horse. So at the moment, and because of where we are in this trend cycle, and you need to do whatever you are comfortable with, regardless of what anybody, including me, says, personally, I don't own any of that. None of it. Because I am quite aware that it is severely overvalued and going down. And every time you hear President Trump say that he wants interest rates lowered, what he's actually saying, or the central banks, they were doing it in 2008. Suddenly inflation became a good thing. Yeah, in the 70s, it was not such a good thing. But magically in 2009, it's a good thing. Inflation is such a good thing. For whom? Not for you, not for meme, right? For those that own those hard assets, though. So I don't own any of it, nor could I recommend any of that stuff. I simply own food, water, energy, security, barterability, wealth preservation. I'm working hard on that community piece. That, to me, is the single most important piece. and making sure that we have shelter. So that's where all of my wealth goes, into supporting those things. And this is from Facebook. It's James Nobriga. What are your thoughts on investing today in the GDX? If you don't hold it, you don't own it. It is not an investment. It's a gift for others. You decide whether or not that's worth it to you. We are in a very precarious position. Look at what's happening in the spot gold and silver markets. Silver is telling you confidence is eroding very, very rapidly. And I've shown you before, and I will show you again, that confidence in any Ponzi scheme, in any con game, which is what these markets are, it requires new money and it requires confidence. And once that confidence goes away, the system implodes and you're in hyperinflation. So I'm holding my physical metals plus making sure that I have surety in all of those other areas. That's why community is arguably, although for me, has become the biggest, most important issue, because while I've been working on that mantra since 2008, because I knew the system died then, we just don't have the same luxury of time. And even though I only know one other person that's more prepared than me, and he's in Panama, and I'm so impressed with him to this day. I'm so impressed with him. Even though I'm more prepared than other than him, anybody else that I know, I'm still not fully prepared. That's why you got to have a community, because inside of a community, everybody brings the tools that they have and the gifts that they've been given to support the entire community. What do you really have to barter with if not your labor or your creativity? Any talent you possess, any skill set that you possess, that is very barterable. I know how to lay irrigation because I did it. Do I want to go out there and lay irrigation right now? No, I do not. Would I do it if I had to? Yes, I would. Of course I would. But I'm very happy to barter for some food or for some silver or for some gold or whatever. So if you can't afford, or you think you can't afford it, because remember, gold and silver in any form is monetary at its base. So, for very, very little, you can afford it. But if you don't feel like you can get everything that you need, beef up your skill sets. Go to a farmer's market. Go to a community garden. I'll tell you, something happened this morning that really made me smile a lot. And that was Ashley, our social media manager, who came in, and she had just gone up to an ASU campus where she graduated, and she was walking through it, and she graduated a few years ago, not that long ago, but a few years ago. And as she was walking through the campus, she came upon a community garden. And there were people out there studying, and there was a sign that encouraged people to harvest, right? Take a tomato, take a basil, take whatever. And I don't know if it was there before or not. She thinks it wasn't, and that could be. Or maybe because now she's working with us, she's more attuned to it, so it made her notice that. But that's how you find like-minded people, right? Go to a community garden. How about giving them some of your time? Learn how to plant a tomato and take care of it, the kind of water, the kind of soil. Learn some skill sets, because in a reset scenario, especially with food and water, those are the skills that we all need to have. And, and that is barterable. That is valuable. But anything physical that you have is also barterable. So beef up on that, but form your community, get to know your neighbors, go to a community, go to a farmer's market, give them your time, develop that relationship. And whether you have gold and silver or not, it makes a whole lot of sense to do. And Deb Warner, 2978, haven't seen you here you may be, because I don't get to see all of that, but I'm glad you're asking a question. And Lynette, what are the chances of having silver confiscated with all the power plants being built? I have been, that's something that I am working on and thinking about quite a bit. It'd be harder to confiscate silver because of how much it's used. They can't just confiscate the silver. And to your point, it's not just all the power plants being built, it's all of the technology that's in place where a lot of these these corporations generate more GDP, more money than governments do. And boy, do they spend it in governments. I mean, it's really kind of one and the same, right? You scratch my back, I'll scratch your back. Anything is possible. But again, there are all different ways that you can own silver, right? All different ways that you can own silver, right? Be diversified. Be diversified. And then it takes that edge off. Let me finish. I may have a different opinion by the time I finish doing my work on it. But I think I'm not as concerned, but you guys keep asking me, which kind of makes my concern level go up a bit. So I know there's just not enough time in the day, but I am working on it. And this is from Facebook, Russell Scott Borland. When you say you own energy, what is that exactly? That's a good question. Thank you for asking that. And what that means and what I'm really talking about is it takes labor and energy to mine and then mint an ounce of gold, right? But gold is indestructible, which means that energy and that labor is stored in this ounce. And because it's indestructible, I can take it in this form and put it into this form. I can take it in this form and put it into this form, right? And that means that the same labor and the same energy that it took to pull this out of the ground and mint it, mine it and mint it, is used over and over and over again, not new energy. So when I'm looking at the cryptocurrencies, this is my physical representation of Bitcoin. This is the physical representation of Ethereum. And this is a physical representation of XRP. Haven't you ever questioned why they always show the digital currencies in their physical form in gold, silver, or platinum? Because that's the way they want you to think about it. It's called perception management. But these take energy to create one time. And that energy in that water, it's used up. You can't divide this into something else. It has no physical body. It's just an algorithm. So that's what I'm talking about when I say that gold holds energy and can be used over. That same energy that it took to create this can be used over and over and over again an infinite number of times. And by the way, for those that are new to the lives, if I answer a question, but it's not to your satisfaction or you didn't really understand my answer, please, I want you to know, just let Josh know, or Tom will be doing this again soon. Josh is not leaving us. He's just going on to help us develop the new website with all of the mantra pieces. And he is a key guy here. But just let today Josh know that you don't understand it, and I will try to explain it in another way. But that is my job. It's my job and my goal to translate financial noise into understandable language that puts you in a position to make educated choices that puts your best interest first. And it has to really come from you, these choices, because you are the one that will reap the rewards or suffer the consequences of any of the choices that you make. So all I really want to do is help you make educated choices. So let me know if I don't explain it in a way that you understand it. I'll figure out another way to say it. Even if I have to postpone it and do it with charts and graphs, I'm happy to do that. And Ginny RZ3N asks, since the price of silver and gold has artificially always been so cheap, how did the rich ever liquidate it when they needed money? Well, you can always liquidate it because in terms of the currency, whatever that currency is that's what you get, that tool of barter wherever you are in the world. But like I showed you a little bit earlier, it doesn't take that much time. Look, the belt, the silver belt, well, I bought that right before the big run in spot silver. So that doubled in terms of currency in a very short period of time. And I wouldn't sell it anyway. But this I bought in 1987. It's the same necklace. If I'll probably have this belt forever. It's the same belt, right? If I needed cash today, what I paid $350 for, I could liquidate for, well, it's more than an ounce of spot. So even if it lost all of its jewelry collectible value, it's still more in terms of dollars than what I had paid for it originally. That's over time. And there were crises that happened between 1987 and today. But yeah, it holds your purchasing power intact. That's the point of it in any form. And they got rich when the rich, when they needed to, they liquidate it. Right? You see all the collectibles that I have back there. And there were times, I'm not going to lie to you, I was a single mom. I had to raise 2 babies by myself without a whole lot of help. There were definitely times when especially in the beginning, where I liquidated some of my pieces and that kept us fed and it kept the roof over our heads. So that's how you do it. When you need the current fiat cash, you liquidate what you have. That's also why you're diversified. And so, in the strategy, which is built in layers, the first part of the strategy is for you to sustain your current standard of living, which is kind of what you're talking about in this question. So what composes that first part of the strategy? Well, some of it is in cash because that's recognizable. Some of it could even be in Goldbacks as they get more recognizable. And for those that are not familiar, because I know Tom is probably, are you familiar with Goldbacks? I didn't think so. So I'll explain it. There's actually, in this particular bill, there is 1/1000th of an ounce of gold that's embedded between the front and the back, right? So that's why it's called a Goldback. So you could have some of this that could take over for the cash. You could also have some digital gold, like in Glint or Kinesis, where you have a MasterCard attached to it. And all of those, instant liquidity, you're out shopping, you need to buy something, you can. But also in that same area, that barterable area, we have all different sizes of raw barterable gold and raw barterable silver. So that first part is your first line of defense, and it includes this piece, but you'd use the other first, right? So that's that layer. And if I needed cash, this is my savings account. This coin was minted in 1879. I should know it. I looked at it enough. But 1879, this is my savings account. If I needed to liquidate some of this to pay salaries, because I have a lot of employees and I need to make sure that they're taken care of no matter what, well, this is what I have for that. And I would not have any issue or problem whatsoever if I needed to convert this into the local currency or even pay them in this, right? So this is my savings account. I'm not using this for that function. For this, I'm converting it into income producing assets. maybe rights, maybe income producing real estate, maybe dividend paying stocks, whatever. But this I hold back. This would be, now depending upon the quality and the grade, you could also use this to protect the assets that you've managed to accumulate. But call us. It's a very customized strategy that's based upon what you are trying to accomplish. And, it's the right tool for the job. That's all. Not all gold and silver are created equal. There's gold and then there's gold. There's silver and then there's silver. So yeah, that's how you do it. You accumulate the assets while you can, and then when you get into a position where you need the local coin of the realm, right? You need some of that barterability, you just convert it. It's gold. It's easy to liquidate. It's very highly liquid, but not just like that, right? You're going to have to send it. Let's look at that, right? With contracts, boom, in, out, boom, in, out, in, out, in, out. It doesn't take anything because it's a push of a button. But if you have this, you're going to have to send it back to us. So there's going to be probably 2-3 days in the mail. If you bought it from us, as soon as we get it, we can liquidate it and then wire you the funds. So we're good. If you didn't buy it from us, now we're going to have to send this to the wholesaler for review. And once they are sure that it is what we say that it is, slabbed, whatever, then liquidate. You got to add another week onto that. So you see what I'm saying? The paper contracts are easy to buy and sell. That's not about owning gold and silver. That's about a trade. When you have the physical, then everything just takes longer because it's physical. That's why the strategy is built in layers to address, no matter where you are, from a short-term emergency to legacy, to the kind of gold and silver, specifically the kind of gold that you would pass down from generation to generation. That's dynastic wealth. That is wealth that has lasted in families at least 300 years. You can think about the King of England. 3 legs. Rare collectibles, like truly rare collectibles, real estate, and gold. And you can do all 3 with gold because you can have a gold mine. You can have, there you go. So, yeah, that's how they did it. They accumulate the wealth, and then when they need to, they convert it. And Praying Mathis 2517 asks, you should also stack liquor, salt, sugar, flour, tobacco, and weed. I agree. Absolutely, I agree. And, toilet paper's not in there. Long before 2020 hit, for whatever reason, people go insane around toilet paper during every financial crisis. So stock toilet paper. Now, Jacqueline denies this, but I'm telling you, I remember that moment when she called me. I was at a gas station. I just finished pumping the gas in my car, and I got back in, and Jessica's laughing because Jacqueline said, I wasn't upset. Yes, she was. I'm telling you. She was freaked out because she needed toilet paper, and she didn't have any, and there were none at the stores. Do you remember that? I said, she called me, I don't know what I've got. I said, I have plenty of toilet paper. Don't worry about it. So add toilet paper, Praying Mathis, to that. It's a good one to have. I know. And Jessica's going, oh my God, I can't believe you said that. I also told her that we do have a lot of lamb's tongue up at the bug out. She did not like that. She is not nature girl. But I'll tell you what, you got to do what you got to do when you got to do it. I know, they're laughing here. And Johnny Graham, 6262, asks, wait, you said the U.S. dollar has already lost its place as the world's reserve currency? Really? And what currency exactly has taken over as the new world reserve currency? Okay, so there's a few things to unpack in this question. And actually the loss of the world of okay? So it's that it's really lost, meaning that the dollar was the only reserve currency. And that was basically true up until about 2000. 99, 2000. That's why the euro was created, was to take over as the world reserve currency from the dollar. But of course, that didn't happen. So today, well, number one, at one point, 70% or more than 70%, I'd have to look at the chart again, so don't hold me to these numbers, but I'll be reasonably close. Okay, 70% of the global transactions were done in terms of US dollars. Because if you were going anywhere in the world outside of your borders to buy lumber or medicine or steel or anything, or gold or silver, you had no other option but to use US dollars to do that. But that's not true anymore. Central banks around the world hold multiple currencies that are also considered reserve currencies, right? So number one, we are not, yeah, you agree with that too? I just love this girl. She takes such good care of me. She does. So what currencies would that be? Well, the euro would be one of them. The Chinese yuan or renminbi has been making an attempt, but the use of the dollar in global trade went from about more than 70% to somewhere around, I think, about 40% are the latest numbers that I saw. I'm thinking we lost the status as the world reserve currency. So any currencies, I mean, most central banks will have a basket of currencies these days. So let's go to that next part. What currency exactly has taken over as the new world reserve currency? Well, first of all, you got to put the quotes around the, and I'm not 100% certain of what that's going to be, because when one currency dies, another is born. But here's my guess, and you can write this down. I'll put my neck on the line. You can hold me to this. I personally believe that if we go, that the world reserve currency is most likely to be the SDR. That stands for Special Drawing Rights. It's a currency which is a basket of currencies at the International Monetary Fund. The members of the International Monetary Fund are all unelected technocrats, heads of the central banks, and treasury secretaries. The SDR was created in 1969 to take over as the world reserve currency from the US dollar, and frankly, we wanted to give it away at that point. But then Henry Kissinger went to Saudi Arabia and created the petrodollar, so we retained that status as the world reserve currency. Having said that, the IMF and the SDR, everybody, pretty much almost every central bank has some, but it kind of went to sleep for a lot of years. You can go into in the U.S., it's the USPS, so the U.S. Postal Service, and in the search bar, put SDR. That's been used forever, really, since the early 70s in the airline industry, all over the place. So understand that wheel, and that is already in place in many areas. It was when the system died in 2008, it was actually somebody from China that, and if you'd have talked to me then, if we were doing this before that, I would have said, I don't know what the name of it's going to be yet, but they'll figure it out. However, somebody in China went, what about the SDR? And as soon as they did that, I went, well, that makes the most sense in the world, because they don't have to reinvent the wheel. It's already in place. And right after that guy said, what about the SDR? They took out all of the tools that they had and they tested them, meaning one of those tools, and they gave everybody, all the countries, a whole lot more SDRs to put in their reserves. Now, one of the key pieces of that test was called the substitution fund. And so with the substitution fund, you can take any dollar or dollar-denominated asset like a bond or a stock or the cash or whatever, deposit it into the substitution fund, and then the IMF will convert that into the equivalent denominated in SDRs. That does a few things, because in theory, they can then regulate the rate and speed that the dollars that are out in the rest of the world, how quickly they come back to the US, therefore impacting inflation or not. But quite honestly, even more important than that, what the IMF has been doing with the SDR is, it's the SDR is made up of a basket of currencies right now, 6 of them, but there are no limitations on how many currencies they can put in that same basket. And so what they could do and what they're talking about doing and what they're working on doing is creating a universal currency that, also the SDR, that would contain every currency on the planet. Now, it's brilliant because everything would flow through these technocrats. But on top of that, what you end up having is this big global umbrella universal currency. I did a whole video on this a while ago, but there's a video in there on this. So you've got this big universal currency, this big umbrella that houses every single currency on the planet. But then you and I don't know it because it translates immediately into whatever that local currency is. So it could be the dollar or the yuan or whatever. They're just names. They don't really mean anything. That's the one that I believe will be the world reserve currency. We'll have a universal umbrella, so trade is easy to do, cross-border transactions, all this stuff. Boy, that money could just whip around so fast and be so cheap and Yeah, I got news for you. That won't be good for you and me. But we'll have this universal umbrella, and then we'll be naive to it because it'll translate in this country, in the U.S., into U.S. dollars, and we'll think nothing has changed. Yeah, everything has changed. And just on that, because for those that have not ever seen this exercise before, I really love doing it, and I probably should have set it up. Yeah, here, I'm going to show you. Because they know how to make these changes so that nobody realizes that they've made them. Okay? All right, here you go. And this is especially for you, John. Okay. This is a $20 gold coin, 1 ounce roughly, 1 ounce of gold. But my goodness, if you have enough of these, you put them in your pants pockets, your pants are going to end up around your ankles. They're so heavy. It's so inconvenient, because aren't we always sold on the convenience? It's so inconvenient to have all these heavy coins. Oh my goodness. This $20 gold certificate, well, that you can have lots of them in your pocket. They're not going to pull your pants down. They're so convenient. And look, you just can walk into any bank with this and walk out with that. You can see that little gold coin right there. They're just the same. This has a $20 face value. This has a $20 face value. But so brilliant. Disgusting, but brilliant. Then at the same time, they came up with these Federal Reserve notes. Can you see how much the one looks like the other? But there isn't that little gold thing on there, is there? And here is another bit of the difference. This gold certificate says, this certifies that there have been deposited in the Treasury of the United States of America $20 in gold coin payable to the bearer on demand. This was a demand note. What does this say? This says Federal Reserve note. Well, the Federal Reserve is a private corporation and a note is a debt instrument. So, my friends, while we had sound money gold in the system, and these three things operating at the same time, at the same stated value, right? $20, $20, $20. Everybody thought, well, these must all be the same. They all buy the same thing. It's just the same. So when they took these away, they still left this one. And nobody thought anything had changed. When in reality, we gave up our power. Because at least when we had this system, you did not like what the government was doing, you'd pull the gold out of the system. It forced fiscal responsibility. Juliet, poor Josh is actually allergic to Juliet, and she just loves him. She just loves him. But anyway, at least when we had this, the public had control. Because if you didn't like what they were doing, you pulled the gold out of the system. There was your vote. There was your vote. Do you think we have any rights at all? Do you think our vote matters anymore? Because I hate to say it, but I don't. We have nothing. We have no tools to hold these guys' toes to the fire. They can do any darn thing they want to us, and we have no tools. That's why my most important battle is to create global community and take our power back. I can't do it alone. I'm one person. But together, because 1%, they say 1% is ruling all of us. Well, how about if we take our power back? If 3% of the global population converts into gold and silver and demands gold as redeemable gold, must be redeemable, gold is part of the system again, we can do it. One person can, everybody can. And by the way, this bill was prior to 1971. This bill was just after 1971. We keep the name. We keep it looking reasonably close. People don't realize when things have changed, but they've changed and they're going to change again. So I know, John, that, this might be a little bit challenging to see. But you want to know what is the world reserve currency? This. Because it's the only, and this is not me, this is the Bank for International Settlements, the central banker's central bank, the only financial asset that runs no counterparty risk. This is universal money wherever you go. I could take this ounce of gold, and I do. I could take this ounce of gold anywhere in the world and convert it into any other currency that I want. Universal. And if that didn't answer your question, ask me again, and I'll try and explain it another way.
I have a question kind of going on that same route. So Wolf asked, the SDR almost sounds like the euro. And then Sheik and Homestead asked another question kind of along that same line, that it sounds like the BRICS currency. And so there's all these, like the SDR and the BRICS is like a conglomerate of different types of currencies. Mm-hmm. And the euro as well. Like, what is
the difference?
What's the difference?
That's a great question. Yay, great question. Okay, the difference is that when you have something like the SDR, that the currencies, the individual currencies that are in there, and it can be all of them, that's not a big deal, get revalued on a day-to-day basis. But when you're looking at like the euro or the BRICS, those would be a pegged currency, which means that the strongest entity, the strongest country, the strongest currency in that group, right? Because they're so strong, this was a huge advantage that Germany had with the euro. And by the way, no pegged currencies ever have lasted historically or hysterically. But when you have a pegged currency, then your advantages are pegged to the most solvent, the most powerful country that's part of that pegging. But that also means that whatever this country does, every other country has to do too. So that was a huge problem between, let's say, Germany and Greece, or Germany and Italy. There's a lot of issues around that, and that would be the same with the BRICS currency. I think. I'll double check on that, but those are pegged currencies, and they never last. They look good for a while, just like the euro looked good for a while, because hey, Greece could borrow at the same rate as Germany, so isn't that an advantage? They took on a whole lot more debt, but guess what? When you have debt, you have to repay that debt, and they just didn't have as solid as now. Germany's economy has really fallen down a bit, and however, you're talking about the peg currency, so that's what I'm talking about, and that's the difference between the euro, the BRICS, and the SDR. The SDR is not a pegged currency. Those individual currencies revalue constantly, so that would put the SDR's value a little bit different, kind of like we see now with the charts for the US dollar. That's against a basket of currencies and blah, blah, blah. But those are not pegged. And those other two are. That's the difference. I don't know if I explained that properly. Did I? Do you want a video on that? I mean, I've got to finish. I've been working on this series, which I think is like a critically important series right now. So we've kind of prioritized this, and it's the 5 doom loops of a financial crisis. So I'm really heavily committed to completing that, but I will do a video. Could you just put that on our list for the difference between a pegged currency, et cetera. So I'll do it so you can see that better. And I hope that answered the question. If it didn't, let them know, but I'll do a video on it. I've done it in the past. I'll do it. And okay, Steve Brown, F7W asks, SHTF, edible assets will rule, and the ability to grow it. Order the chicken coop now. Totally agree with you. And the quality of the food. I mean, there has been so much degradation in the quality of the food that we consume. And how does that impact us? Well, we all know, do you remember the old, you might not because you might be younger, but you remember garbage in, garbage out when they were talking about computer programming? It's the same thing with bodies. If you eat garbage food, it numbs or dulls your ability to learn, so it hurts your ability to pay attention. And remember, when they were setting this system up to begin with, and I'm talking about the governments and the central banks, I hate those guys. But what did they say? If the public has to work harder to maintain their standard of living, they will have less time to pay attention to us. And isn't that true today? Isn't it? So they're evil, but there you go. I agree with you. Get that chicken coop now. Create those relationships now. Get it done. And Donkey Burt's 4217, what are your thoughts on states issuing goldbacks? I think they're great. I mean, look, I would not put my whole position in it because I'm not even sure that it really quite hits the fundamental value criteria. I haven't really done that math yet. However, I do think that we need different convenient ways to have that initial liquidity, and I think that goldbacks can fit in there. But I would not do this for the entire portion of the portfolio, but I could see it for a portion of the cash portion of the portfolio. I could definitely see that. So that's how I feel about it. And Connor McCarthy, 5960, asks, Lynette, what's the difference between monetary gold and gold bullion? None. They're the same. They're the same. Also, huge shout out to my strategy specialist, Gen Z. Such a wealth of knowledge on currency life cycles and real estate. I'm so lucky. And I think that everybody will find that whoever they're talking to at Zang Enterprises, wealth of knowledge. We work together constantly, and Jen is just great. So I know you're happy. We've gotten Riley shout out. Kenneth was here earlier doing a video. I mean, yeah, Sari, I love it when we get those shout outs. Thank you so much, because I know one of our criteria when we're hiring is we're looking for people that care. We're looking for people that actually want to make a positive difference for a lot of people in this world. And I think that's very important. So thank you for that. And Rupert Patterson 8 asks, can we quantify how much paper gold affects the price of physical gold? Does paper gold suppress the physical price? And if so, can we tell how much? It's really hard to tell because it's almost impossible to find out all of the derivative contracts of gold. I mean, I can look, the Bank for International Settlements does publish that on a quarterly basis. So anybody can go in there and pull some of that data. But when I first discovered them, or not first discovered them, I'll say the last time that I was able to see what I think of is probably better data, that's 62,000 or 64,000, whatever it was. I think it was 62,000. I think I misspoke earlier. But 62,000 ounces for one. After that, up to that point, central banks had really not been much in the derivative market. You know, a little bit in the foreign exchange market to manage their currencies, but that's just one currency against another, totally another story. But they didn't really dabble too much in the derivatives. After 2008, they are fully in it now. And so what they did was they changed how they account for everything. So I would say, Rupert, that it's probably impossible to get complete good data on all of the derivative gold that has been created and then how that suppresses the price other than understanding how to get the fundamental value. Because this is debt money, right? We've already established that this is a note, this is debt money. So how do we even know what the true value of an ounce of gold is in terms of, in this country, dollars? It's simple. You take all of the debt and you divide it by all of the gold, because gold, there's a finite amount. Debt, there's an infinite amount, and then that gives you a number. So when I do it on a global basis, take into account all the world's debt, presuming that's even right, because there's so much off-balance sheet stuff that's going on, that comes out to, I think the most current one I did was about $38,000 in change. However, when I looked at it just for the U.S., because remember, every single central bank has a gold revaluation account. If they're going to take care of their debt, then it has to be individually. And so in the U.S., that number was something like $135,000 for 1 ounce of gold. But nope, I do not know. I do not have, I mean, I can show you how much they're reporting in the FDIC, the Office of the Comptroller of the Currency, the OCC, runs a quarterly report on derivatives in the FDIC insured banks. And if you go in there and you scroll, you can find lots of things, but one of the things that you'll find is precious metals derivatives, which are to the moon. However, they had changed accounting policies or practices a few years ago. To be more honest, no, there's no way to know. It's too hidden. It's too hidden. But we do know what the fundamental value is. And those, where you see the pain on my face is there's so much off-balance sheet garbage that happens and so many derivative contracts which are leveraged that even if I tell you 38,000 or I tell you 135,000, that is very conservative, very conservative. And when you look at the level of movements in places like Venezuela, who have already had 6 overnight revaluations, I'm pretty sure the first overnight revaluation went up 3,500%. So I can tell you it's 38,000 now, but does that mean that's what's going to be? I don't know, because it's on a one-to-one, and the more debt they grow and the more derivatives they grow, the higher that number goes. So for us to see a first overnight revaluation, now I'll blow your socks off. $3 trillion? I mean, it could happen. Why? Because there's no value in those trillions. It doesn't cost anything to create this stuff. Nothing. It takes labor and energy and wealth to create this. It costs nothing to create this. And going into the digital system, it'll cost even less. So that's the true value of the currency. And the Federal Reserve even shows you that in the FRED, the Federal Reserve Education Department, Purchasing Power of the Consumer Dollar. Take a look for yourself. Look at how they have a big fat zero on the bottom of the left-hand axis. That's because that's how much that's worth. So I wish I could. I can't, but I get you as close as I can get you. And with spot out wherever it is, bargain, bargain, bargain for both spot gold and spot silver. Ain't Carol Model 182 asks, should I trade in some of my silver for gold or just buy gold? I don't know. What I suggest is you call us, establish what your goals are. Let's see what you need. But you need both of them. I own both of them. I own more gold by a wide margin than I do silver. I own more slabbed gold than I do raw gold by a very wide margin. But that's because it's based on my goals and what it is that I'm trying to accomplish. The strategy is based on your goals and what you are trying to accomplish. If you don't have enough silver, then, you might even need more. I don't know, but call us because then you'll be able to make an educated choice. And that's really what we're all about. And Punisher 3514 says, where do you sell physical silver? Coin shops charging 15 to 20%. Are you kidding me? Please comment. First of all, you need everybody to stay in business because you're going to need somebody to buy that back. On the bullion, that's a pretty large upcharge, but they have a lot of overhead. So, but that's also the point of understanding the fundamental value, isn't it? The only way that you can make an educated choice on any investment that you are making is if you understand the true value of that investment. Because the two guarantees I can give you, I will show up and do the work, and at some point, all assets go to their fundamental value, period, right? Period. So if the fundamental value of an ounce of gold is $38,000, you're not spending $38,000 on that ounce of gold, are you? Wherever the spot happens to be on that, 5,000, 6,000, 30,000. It's a bargain. If you're penny wise but pound foolish, you will get hurt in the end. What they do is prefer you to stay in this because then they charge you lots of fees that you don't know about. I can guarantee you this. The fees that you know about are typically a whole lot less than those that are hidden from you. Because people never want to pay fees. Are you kidding me? Right? Who wants to pay fees? I'd rather pay fees that I know about and protect myself. You think there was a markup in this belt? I'm sure there was. They have to pay their employees. They have to keep the store open, et cetera, et cetera. I don't care. Why? Because I knew how cheap this was when I was buying it. That's why. I knew how cheap this was when I was buying it. You gotta know the fundamental value. You gotta have a plan to make educated choices. Educated choices are not random or not based on a couple pennies here. Because you can hold on to this. Well, I'm a trillionaire in Zimbabwe, but I can't buy anything with it. 1 trillion times 0 is 0. Be wise. Make choices that actually support where you want to go. If it's a coin shop, where Zang Enterprises, or wherever it is that you want to go, being clear on how much this is worth. You know how much this is worth? 0. 0. And that's the Fed telling you. It's the only time they're ever honest. So, Katavi3428 asks, hi, Lynette, looking beautiful as usual. Thank you so much. You know, I do it for you guys. When I'm not on air, you can ask these guys. I do not put this face on. This takes a long time, so thank you for noticing and acknowledging. I was wondering if you think we will be able to travel outside the U.S. with our metals on hand without risk of confiscation. I can tell you that's something that I test all the time. Every single time I travel, I haven't had all the places, all the different countries that I've gone to. I have not had one person ask me. Not one. And I travel mostly with my least expensive slabbed coin, because if I lose it, it's not going to matter that much. And I usually will travel with, just a little bit of raw and a little bit of silver. So I travel with my metals all the time. Probably shouldn't say this on here. I don't carry a lot with me, but I want to see, is somebody going to stop me or ask me questions about it? And I have to tell you, they did ask about the dime cards. And so if you're new to the dime cards, I'll explain. It was really funny, but that's only because I had a lot of these. These are dime cards. So if you are a client, we will give you the first one free and then the rest of them at our cost, because you're kind of the army, right? On this side is a dime that was minted prior to 1965. So it's 90% silver. On this side is a new dime. And they look the same until you look on the rim and you'll see all silver here and you'll see base metal garbage over here. How much this dime is now, I don't know. When we put this card together, which was August 27th of 2025 was when we bought this particular batch of dimes, and our cost on those dimes was $2.78. Obviously, spot has gone up, so that's gone up. But basically what I realized was that I'm asking you guys to support sound money, where if you were born after 1965, you never held a silver, well, you might have, because they didn't take them out of circulation, but you probably didn't realize you were holding an ounce, or not an ounce, you were holding actual silver in your hand. When money becomes too expensive, more expensive than the face, they have to go to a cheaper metal, or they have to go to a cheaper currency, which is why they want, one of the reasons why they want to go digital, so they don't even have to spend the money on printing that. And they call that money. It's a flippin' joke. It's a flippin' joke. But if you don't have a dime card yet, call us. If you're a client, you become a client, we'll give it to you for free. And then you can buy as many as you want at our costs. And what we're hoping is that you start to educate people and you drive the sound money movement, because we've got to get sound money back in the system again. We have to do it for our kids. That's who we have to do it for, if you're old like me. If you're not, you have to do it for yourselves and your kids and their kids, on and on. So, yeah, I've not had a problem with that. And as Vid S4192, please review paying off your home with gold or silver. Yes or no? Did I understand there will be time to get out of gold and silver? Okay. Number one, we did a video on that, but I guess it got like convoluted. So I've got to re-record that again. There's a whole video just on that one topic coming out pretty soon. So be patient on that. Okay. Every portfolio should 100% of the time have a nice solid foundation in sound money, physical gold, physical silver. However, depending upon where we are in the trend cycle and what is happening would determine the kinds of metals that you need to hold and the level of the metals that you need to hold. So because there really is absolutely zero doubt in my mind, but that we're at the very end of this currency's life cycle, that's why I don't own anything else. right? I definitely have to keep cash because that's my tool of barter and I'm running a business. So I don't really have any other options than that. But I have the gold to offset any of those losses. So right now I am all in. But that has not always been true, nor do I expect it to always be true. My legacy gold, 100%. Jewelry, collectibles, 100%, I will hold them, and coins as well. But mostly they will be, this is not a legacy coin, but mostly the ones that I would hold forever, not even considering liquidating unless there was some desperate reason to do so, would be my legacy coins, which are super, super rare. But like the raw coins, by the time we get to the other side of this, then there will be most of this barterable that, I would convert into the new currency as I need it. I used to think that I would do a lot more, but if we are in a fully trackable digital currency, then I will do it probably monthly or quarterly or something. I'll let you know when I get there, to converting into the local currency, because I don't want them to have that much control of me. And what they've said is once we are fully digital, then there will be no limits on how low we can push interest rates. Well, what do negative rates do? They were tested quite heavily in 2009, 15 years, zero interest rate policy, right? They said, meaning the central bank said, that negative rates were a choice because it'd be perfectly logical for you to bust your butt at work, accumulate dollars that are losing value, and then loaning it to a government or a corporation and agreeing to take back even less than that. Who would you do that for? The only people that I would do that for would be my children. But that's where they're taking us, because once you get all of the purchasing power out of the currency, and that's where we are right now, officially we have 3 cents left. It's less than that. When the confidence level breaks the lowest level ever, right, which is what I'm waiting for, it's game over. Then I think the real clock is ticking in a very big way for us to have the hyperinflation visible to the public, right? So I have to say that 100% of the time you should have a foundation in sound money in a bunch of different forms. But you wouldn't probably need all of this barterable on the other side of this. So just stay tuned. I'll let you know what I'm doing for myself. And that's also, by the way, why I don't do some other things that if I were not on air explaining and helping you understand this stuff, that I might have taken more risks with. But ethically, I can't do it. I can't tell you to buy a Trojan horse. I can't do it. And it's not worth it to me. I'm here for you. I work for you. That's how I feel about it. And so stay tuned on the paying off the mortgage. Yeah, we did a whole video on that. We just have to redo it. But okay, happens. Mega praise him. When hopefully the IRS goes away, will that mean no more tax on gains? Well, you look at governments need those taxes to function. Do they need as much as they're getting right now? Probably not. Will the IRS go away? Well, maybe if we're in sound money and we vote them away, because if we've got sound money, we really, frankly, don't need the central banks. So, no more tax on gains. Well, that would be lovely. But quite honestly, it's probably more hopium than reality, because governments and central banks are not giving up their money monopoly and their control of us. They want more. But also, I appreciate you and your team so much for all you do. And I love your shirt. Thank you so much. And I'm so glad that you appreciate us, because guess what? We appreciate you. I mean, when I tell you that this is my favorite time of the week, You've got to know that that's true. If I could do everything live, that's the way I started. Everything was live that I did. And it's kind of what I prefer, but that's not always possible. And I'm glad you like this shirt. This is so old. I can't even tell you how old it is, but I like it too. So it's fun. And Emir Bilal Mohammed asks, Lynette, I am accumulating physical silver since 6 years. All indications prove the physical price shall skyrocket. Well, yeah, in terms of this crap, but bog whales still able to control the price. Question, till when? That is changing. That has started changing a year ago, last January, and it continues. I can't tell you exactly when, but I will when I know it. But I can tell you 100% that change is already underway. And I'm very happy about that. Jess E. J Studios asks, if we reach a point where gold and silver retail dealers no longer have ready source of metals and go out of business, what would be the means for diamond hand holders to sell their precious metals? Okay, that's a great question, because in any kind of revolution, there's always a shakeout. And so that is something that is really a possibility, especially if you're working with a local coin shop, which, I'm not saying that you shouldn't. You got to do whatever you're comfortable with. But, a company like ours, which has a much broader reach and also has a higher level of wholesalers. Having said that, there are 33 direct users of physical gold. There are refiners. Which would be one of the places that you could do it. There are pawn shops. There's jewelry shops. But you've got to understand that the demand for physical gold, 33 different entities that I could count, 36 different entities for silver. So if one area goes away a little bit, another area will pop up. Liquidating precious metals is the least thing that you ever have to worry about, because it has the broadest base of buyer. This is not something that Wall Street wants you to understand, because they want you comfortable with paper, because that's how they make their money. But I'm telling you, there are over 3,000 dealers. The collectible market is bigger in other parts of the world even than it is in the U.S. So this is a huge market for auctions, for refiners, for refabricators. There's 33 entities that use gold, 36 that use silver. This is not going to be a problem. Where do we sell it? You can sell it. There'll be more that pop up. And I don't anticipate, we're working hard to future-proof this company so that we will always be here for you during this transition. And guess what? Even after this transition, we're working on it. And Emma Green 6968 asks, if you were to buy a combo of physical gold and silver today, what would you purchase? Both. And it's based upon what I'm trying to accomplish. So if what I'm trying to do is maintain my current standard of living, then I'm just buying raw metals, both and probably a bit more silver than gold, because it kind of depends. I want silver to take to the grocery store and the gas pump. I want gold to make sure that I can pay my property taxes, or if I need to go to a doctor or something like that. So we have this all listed out. That's why when you sit there and talk about your current standard of living, we know, well, you need to weigh more heavily into silver, you need to weigh more heavily into gold. So it just depends. That's why I can't give you a blanket answer. But both, if what I were trying to do is pay off my mortgage, that. If what I'm trying to do is protect my 403B or my 401k or my Bitcoin holdings or something like that I cannot or choose not to liquidate, then I want this. So if what I'm trying to do is leave a legacy or actually convert into income producing assets when they're cheap, then I want this. If I want to leave a legacy for future generations, then I want this. So it kind of depends, but I'm definitely personally a lot more weighted in gold than I am in silver. But I own both in lots of different forms, in every form that I can imagine, other than paper. I don't have any paper. And Joe Brown 4426 asks, where do you recommend we hide our gold? Well, we have a one sheet on hidey holes. I do have it up to do a video on that, but also there are private vaults, and I'm okay with a private vault. The barterable part of your portfolio, you want to be able to attach that like that, right? Because even if you have to bug out, you want to make sure that you can grab and go. But the part of the strategy on this where you're going to execute, not necessary for you to hold it that close as long as it is private. So not a bank safe deposit box, because that is not a private vault. They are attached to the federal government. They can shut down and there's nothing that you can do. They can keep you out of your box. They can open your box. But a private vault is different. That vault is actually, or that box is actually in your name. You have the main key. They cannot get into that box without your key. They can't, I guess they could drill it open if they absolutely had to. But a private vault, which is where I hold, by a wide margin, the lion's share of mine, this. But your barterable portfolio, that's where you need to figure out where will we hide it. As an example, if you have stairs in your house, that's just dead air underneath the stairs. So you could actually take one of the landings off and create a hidey hole underneath there. Nobody's going to think about it. How many people, especially in the U.S., it has gold or silver? Not many. So it's not like anybody would even think of it, but you got to be creative. I had a client that had a fireplace and she took out some of the bricks inside the fireplace as a hidey hole. So call us. We've got a one sheet on a bunch of ideas. I will do a video on it, but it's not, frankly, the single most important video that I'm doing because I really want to get those really want to get those doom loops done. But yeah, there's that part is pretty easy, just not obvious. And we have more questions? Okay. And Shinui16 asks, how about leaving the country with our precious metals? Is there a way to do it the right way? You know, I do get this question, and it is something that weighs heavily on me. Like I said, it is one of the reasons why when I travel, my next big trip is to Australia. I think the event is on the 26th or the 28th or the 25th, something like that. Anyway, and yeah, I'll be carrying a slabbed coin. I'll be carrying some raw metals. It's not like TSA agents have any clue what gold and silver is. And I will also point out, like on this new piece of, no, it's not the bullion, this is the bullion. It has a face value of $50, 1 ounce gold. Why does it have a face value of $50? Because the official U.S. price of gold is $42.22. Do you think that TSA agents anywhere in the world are paying attention to this? No. So in reality, you could divide 10,000 by 50, and that's how much of this that you could carry because it's got a face value of 50. You get even more bang for your buck when you do it in this direction because these have a face value of 20. But I can hold one coin that is worth many millions of dollars. So it's a very easy and compact way to transfer your wealth from one place to another. Having said that, you know, I've been doing a bit of traveling, and I did work with Nomad Capitalists. I'm going to be doing another event for them in, I think, October, the end of October, beginning of November. So I'm excited about that, and I think it's important. If this is something you're thinking about doing, then you might want to consider getting established and having a stash there already, wherever it is that you're thinking about going. You might have noticed a guest that I've had on. If you don't, you might want to look him up, and that's Javier, who is in Panama, and he is Venezuelan and has lived through some of those revaluations. So he is an attorney in Panama, and this is his specialty. So there are many ways that you can do it. You just want to be very intelligent about how you're going to do it, and you have to plan it out. You know, you're not going to make all of these plans and get to safety just like that. I personally have been working on this with the gold since 2002, in earnest since 2002, and with the food, water, energy, security, community, and wealth preservation since 2008, because I knew that's when the system died. So the right way to do it is to have a plan and figure out, know what's going to happen before, because there's no time. Once the crisis hits, there just is no, you're not going to be able to do it then. And Rob on the Road asks, so many people fail to realize a credit system is needed. Rob on the Road. So many people fail to realize a credit system is needed for liquidity to grow the economy when you've run out of sound money. The economy would be restricted to the amount of gold or silver. Yeah, gold forces fiscal responsibility. Booty hooty Rudy Manooty. Because before we went on this credit system, as you call it, we had ebbs and flows. And it worked like this. Let's just imagine 3 islands. And this island is very poor, so it's important for them to be creative. This island is very rich. This island is right in the middle. So the poor island gets creative and creates this fabulous widget that really does a lot of great stuff. So this country over here that has a lot of wealth goes, wow, I want that widget. So they start buying the widget, and the wealth now transfers from this very wealthy country to this poorer country, and they have an increase in their standard of living. And maybe even the scales tip. And they've now sent so much money out of this wealthy country to this, what was once a poor country. Now that country is really wealthy. Their standard of living has gone up. This other country's standard of living has gone down. And now this medium country over here has produced another widget that does something even more miraculous than this widget over here. And then this country starts buying this widget, and the wealth transfers that way. So that's the way it was for thousands of years in the global economy and even in the local economy, how the wealth would transfer from place to place. And it forced fiscal responsibility. And you couldn't transfer the wealth completely away from the people. You go into a credit system, that's based on debt. And what you're doing is you are working for corporate debt. Why? My question to you, Rob, why are you okay working for corporate debt that makes you poorer and poorer and creates booms and busts? And why is it okay for you to have this massive K-shaped economy where the wealth transfers to the top and the people on the bottom can't feed their children? Oh no, oh no, 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 no. You give me restrictions, you give me the rules that I have to follow, and I would much rather have an ebb and flow than a boom and a bust, because in those booms and busts, it's the 99% of the population that suffers. I don't want to work for corporate debt. So I'm forced to. I have no choice but to do that in this system. But I convert it to sound money to protect myself and my purchasing power. I do not want in this credit system where my children, my grandchildren, my great-grandchildren end up homeless on the street that our forefathers conquered. I want Constitution again. I want constitutional money again. I want a system where the individual is the single most important person on this thread. And then the state governments support that individual's rights. And then the federal government supports the state governments to support those individual rights. I hate the fact that my granddaughter has fewer rights than I have, and there's nothing I can do about it. Oh, I can complain. I can do what I'm doing here to get sound money back in the system. But you get sound money back in the system again. Now the public has their rights back. They have control. No more booms and busts. How about ebbs and flows? How about your kids can have a dream and actually have the ability to make those dreams come true, like I did, being born in 1954, when we were still on a reasonably sound money system. Bretton Woods. I mean, there's so much to this. No, I could not disagree with you more, Rob, on the road. This is a method of thievery. The only thing that any of us really have to barter with is our time. That's what we have to barter with. And if you look at how much we got paid, $800 a year in 1913, $800 a year was the average wage. And you're sitting there and you're going, what? That's the average annual wage. And yet, if you convert that into ounces of gold, we get paid less today than we did back in 1913. I'd love to sit down and have a conversation with any central bank, any financial person on the planet. Let's have this discussion and bring your evidence, because I got lots of evidence. My nickname used to be, Jacqueline doesn't like me saying this, but it is, Data Gal. My choices and my opinions are based on hard, historic fact. And I'm not going to deny them because of the greedy system that was built to transfer your work. They wanted you to work less, or they wanted you to be willing to take less pay. But boy, if you were used to getting $5, you weren't going to accept $2. However, if they could inflate that value away, you were working for the $2. You just didn't know it, so you didn't complain. What's price stability? Well, if you and I are dictating or saying, hey, well, price stability, what do we think? We think that gallon of milk stayed the same over time. But that's not what the central bankers mean when they say price stability. They say that they rob you of your purchasing power at a slow enough level that you just take on more debt. So your statement, I'm sorry, because I usually try and stay neutral. Let me just have a second here. All right, I'll say it in 2 words. You're wrong. North American 287 asks, Canada has no gold reserves. What are the odds Canada will confiscate my gold? It rises. If they have, then they don't. And you've seen how authoritarian they've been. I mean, that trucker strike, perfectly legal. They didn't like it. The government didn't like it. So boom, they cut out the bank accounts. I think it's probable. I could be wrong, and I hope I am. And I hope that we don't see an overt confiscation, but they've been confiscating your wealth since the day you were born. One of my favorite activities to do is go on that purchasing power chart on the Federal Reserve System. And it doesn't matter because all currencies, the way they want you to think about strong dollar, weak dollar, that's against another currency. So you could do that. But go into the purchasing power chart and put your birth date in there and then look at how much they've robbed from you since the day you were born. Do you really think they're going to stop at the last minute and go, you know what? We've gotten enough of your wealth. Okay, you can keep it. I don't think they will. I could be wrong, but everything they've done is just the opposite of that. So unfortunately, I think the odds that Canada will confiscate gold of the citizens as a very mineral-rich country, and yet they have no gold. Yeah. And I'm working on some things specifically for Canada. In fact, I'm going to be meeting with Jessica after this to go over it. So stay tuned. I'm working on something for you guys. And as Viv's 41, well, we already talked about Goldbacks. So Colleen Allen, 3382. Lynette, how do you log in all your coins? In other words, how do you keep track of what you purchased and sold? Do you log the information in a notebook? No, actually, if you're executing a strategy with us, we have everything laid out, and this is the way I have it. It's all on a spreadsheet, and it's all sectioned, so it's quite clear what the function of each coin is. Including the bullion, and that's how we track it. And so if you're working with us, we track it for you, and you'll see the population, you'll see everything. So that's how I do it, and that's how we do it at Zang Enterprises. And if you bought gold and silver elsewhere, we will put that in your strategy as well, because we need to know everything, and so do you, and you'll see where it fits. And Michelle Chesser, 3147, asked, how does spot gold price affect the cost of collectible gold? It depends. That's a great question. This is collectible, and let's pretend that this is not as high a population coin as it is, right? So on the raw stuff, and also on the very high population coins, the common dates, well, it pretty much runs at the moment with the spot market. And I am really working on that numismatic presentation, so stay tuned, because you will actually get to see this instead of just hear me talk about it. Hard evidence. So if it's a very high population coin, or it's raw like this, which would be a high population, no big deal coin, it will, at the moment, it will run with the spot market, though that's already changing a little bit. If it is a lower population coin, meaning more rare, then no, it diverges. And the lower the population, the more rare it is, the higher the performance, because you can kind of think about it like an auction, right? And there are two tables at this auction, and there are 10 people. Let's just say there's 10 people at this auction. So they bring out 10 pieces of bullion, 10 common coins, and they put it on the table. Well, if everybody wanted one, wherever the bidding opens up, that's what everybody pays, and they all walk away happy. But over here, you have this rare coin, and everybody wants it. So whoever is willing to pay more for it, or the most for it, I guess you should say, gets it. But then you had 9 other people that want it. So that demand is still back there, even if they couldn't or wouldn't pay the price for it. And that's the way that it works in versus the spot market. So the really rare coins, we're talking that'll go for like $15, $20 million. They have absolutely zero to do with the spot market at all. They have consistently been making new highs. And in fact, when you look at the physical only markets, the ultra rarities, which I show you pretty regularly, and you'll see it in this work, then that's what breaks out first. Now, people that can afford $15 million on a coin, I'm thinking they either write the laws like Treasury Secretary Wooden did in 33, or they have the ability to influence those that write the laws. But you don't have to be up at that rarity level to have no impact. once you start getting a little bit more rare, which is really the area that we like to work in, okay, I just want the classification. I don't need to spend millions of dollars on a coin. I want to be below fundamental value, and I want that collectible designation because that gives me layers of protection. And that's what I'm looking for, is those layers of protection. I want to participate in sound money gold, but I don't want to run the risk of having it confiscated. You'll see it. You'll see it. It's only the very common coins and the raw stuff that runs with spot. The rest of them, they're less common, so they'll have a little bit of influence in there. But the more rare they become, the less coincidental they are with the spot market. And ultimately, in this, as we move through this, the spot market's not going to mean a whole lot. It's going to be based on true supply and demand dynamics, and that'll impact this too. So that's how it does it. And but stay tuned. I am putting this on paper to make this more clear. I don't think I explain it very well, but I'm working on it. And that happens to be a priority piece for me. And Deja Vu 0101 asks, Lynette, are you a purchase storage or strategic enterprise or all of the above? All of the above. And vet sexist with courage, you'd need to be. Gold, good for making Trump's toilets. That paper money bought me a nice new 25 Corvette. Tell me paper sucks. Well, okay, you got a Corvette. How much did that cost? Can you pull up the average price of a Corvette? Or you can shoot that number over to Josh, and he'll put it up there, because that happens to be a car that I was looking at. This would have been, I went to college and high school at the same time, so this would have been like 1970, 1969, 1970. What's the average price of a Corvette right now? Wow, that's all? That's amazing. Only $68,000. What did you pay for yours? Because I'm pretty sure it wasn't this base model at $68,300. But let's say it is. Well, let's say it is, and they have a whole bunch of them. That's the Stingray. The E-Ray is 108 and change. The Z06 starts at well over 100,000, and the ZR1 starts at 173,300. Okie dokie. Oh, there you go. He put it up. So that's 2025. Now, this would have been like 1969 or 1970. And I just remember, I just told you I was going to the local community college at the same time as going to high school. So I go to high school in the morning, and then I'd have to go there, so I needed a car. So my father took me out car shopping. First car we saw was so sweet. It was an apple green convertible, Corvette convertible, 1964. This was a gorgeous car. You know, it was like all these little shiny specks in the paint. Oh, it was so pretty. And I said, oh, Daddy, I want that car. That's so pretty. And he said, well, we're going to have to ask your mother. And that was the kiss of death. Because when he did that, she said, she'll kill herself, Bill. So I didn't get that car. But do you know how much that car was? $2,500. Now, is it that that car is worth that much more today, or that the dollar is worth that much less? So, yep, you need to have dollars in order to buy that car because of the way they set that system up. But if you'd have bought gold during that period of time, which back then it was just coming off, so even after the reset, $42.22, think about that. $42.22, now it's over $5,000. What are those percentages? And give me the gold to convert into those other assets. And I'll buy them a whole lot cheaper than you will if you're using just the dollars and sitting just in the dollars. So you could do it, but $2,500. I didn't get the next car I wanted either, which happened to be a black, it was white with a black racing stripe, Shelby Cobra Mustang. Gorgeous car. I think it was like maybe a 65 or 66. I don't know. I wasn't getting a new car. That was also $2,500. And I was there at Barrett-Jackson when they auctioned off that Shelby Cobra for, I can't remember, but I think it was like over $1 million. It was ridiculous. It was just ridiculous. You'd have thought that the whole roof was going to blow off that place. No, that's a Shelby Cobra, but it was a Mustang Cobra. So maybe it was, Mustang. There you go. Is that, one over. That one. That was pretty. That was pretty. I didn't get that either because my mom said, she'll kill herself, Bill. You know what I ended up with? And I'm horrible because I was so ungrateful at the time. But they're like, okay, we've got to go get you a car. And I'm like, you might as well just pick it out because you're not getting me what I want anyway. We're so arrogant when we're young, aren't we? And so they got me an all black Chevy. It was a Chrysler LeBaron. It was a Chrysler LeBaron. All black. It was a convertible, so I guess that was the little thing that they gave me. And it had these huge fins on it. It was so not a girl's car. It was a boy's car. And they thought, and you know what the funny part about that was? It had a gas pedal that stuck. So those other two didn't have that gas pedal that stuck, but the one that they ended up getting me was the most dangerous one of all. It was handy because there was this part where I'd have to go out into traffic that was really hard to get into. So I would hit the gas in such a way and it would zoom me out, but it's a miracle I lived through that car. And fishy fun fish. And by the way, I would love a gold toilet. I mean, I think there are better ways that I'd rather utilize my gold, but. And Fishy Fun 57 asks, which silver is better since refineries aren't taking impure silver? That's not necessarily true. I know that somebody said about the delays, but I checked with our wholesalers and we're not having any problems either getting our hands on stuff or liquidating stuff. So it could be patchy because of the pricing volatility. That's really more my guess about why some refineries aren't taking the silver. So I don't really quite know how to answer that because frankly, like this is sterling. This is sterling. It's 92.5% pure. This would be probably more pure than that. This is 90%. I mean, I buy it all, big and small. I mean, I don't care. I like it all. So, and that's the other thing. I think with the refineries, it's more about price volatility than it is about anything else. But if I've got this fork and I need to buy some strawberries, and how much does this fork weigh? I don't know, but I have the scale here, so. Oh, wow, 1.4 ounces. Who knew? But if I needed to cut a tine off of this because I didn't need 1.4 ounces worth of silver, I'd have no problem doing that. Even my beloved sterling silver chopsticks that I always show you how interest rates work with, it's barterable. And it's real. And it's sound money. Nope, we're good. And Jerry Mandarin 6 asks, will there be a bifurcated society? There already is. I can't help but think there will be many that reject the digital expanse. You know, I'll tell you what, we could not be possibly living in a much more interesting time than we are living. This is like living through the Industrial Revolution. And what I think is really interesting is they keep talking about the retail public that's moving away from the digital currencies. So to your point, rejecting the digital expanse. At the same time that you have corporations and banks and governments that are embracing it. So we're inside of this battle royale, and it's absolutely fascinating. And my part of the battle is to get sound money back in the system again. But I'm telling you, must be redeemable. If it is not redeemable, you have no way to hold their toes to the fire. And if we don't do this now, I don't know, will it be another 150 years before we have the opportunity again? I don't think I'll live that long, but I sure want to make sure that the world that I leave my children and your children is better than it is right now. And that is not going to happen if everything is digital, because they'll just be slaves. We'll be back in serfdom. That's not okay with me. And I think we have time for one more? Okay, boss says one. And that's Matt J, 2171. Lynette, any idea why they're not a standardized universal physical gold, silver, platinum, etc. currency in smaller denomination? Why there's not a globally, gold and silver are globally standardized. And, you know, I brought this test kit, which I didn't really use today, but, you know, we can test gold and silver. It's not really hard, but gold and silver itself is universal. It's universal. I can go anywhere in the world with gold and silver and convert it into any local currency that I want. I don't even need to be able to speak the language. They're going to test it. They're going to make sure that it's real. Something like this is already certified. Something like this is not, right? So it is, they don't need like one little coin. Gold and silver itself is global money. And that's the beauty part of it. And that's what we really need. We need money that is outside of the hands of governments and central banks. Because as long as they're the one, and corporations, private corporations, you know, how about putting it in your hands where you can put your best interest first? You think Amazon gives a crap about your best interest? But they're going to be issuing stable coins. They're going all in for digital. I don't know. I don't see a government or a central bank that cares about you or me at all. I don't. They're just out to save themselves. We have to do the same thing. We have to save ourselves. You need to become your own central banker and hold physical gold and silver in your possession. We have to come together on a global basis and demand redeemable gold back in the system. Doesn't have to be 1-to-1. I don't care if it's 40-to-1. You can keep the rest of it. Give me my 40%. I'm happy with that. But that's how we take our power back. And thank you guys. This has been really interesting. I'm sorry if I got a little carried away. You can see somebody hit my hot button or two today. Sorry about that. But thank you for being here. I really appreciate it. And I know we can change the world together. And why not do that? How about we all just make a really positive difference for a lot of people? And until next we meet, please be safe out there. Bye-bye.